Hi, everyone. Okay, so you want to have a look at what's happening with the markets. A few things I want to show you. First of all, stocks bounce back on earnings optimism. Profits is key. Okay, in the dot-com bubble, we didn't have profits, and that was a major problem. What we've now got, I'm going to take you through each of these headlines and show you a few important things that's going on with the markets at the moment and a few free tools as well that I've got. But for now, stocks are bouncing up because it's earnings season in the US and those companies are beating expectations. Not all of them will do it. I don't know which one's not going to do it, but one major player is going to drop at least 20%. I'm not particularly worried about that because that won't drag the rest of the market down. As long as profits are exceeding the expectations of the markets, we're okay. And that's where we are at the moment with it. Okay, so what else? Morgan Stanley stock traders beat Goldman's in record quarter. Profits. Again, it's because the banks are making profits. And I happen to be a Goldman Sachs shareholder and a JP Morgan shareholder. So I'm pleased. Absolutely. Look at that. Bank of America bankers top estimates as deal-making return boosts profits. Once again, that word profits. Okay, all of that good for the markets. So what might be negative for the markets? Well, maybe this. UK and China locked in standoff over each other's embassy plans. No. But China is a problem, but the Chinese will come to a sensible realization. The Americans will back down, obviously, behind the scenes, and the Chinese will do the same behind the scenes. The reason for that is I was in China on 9/11, and I was lecturing the next day on the 12th of September at the University of International Business, and every single person there asked me just one simple question. Will what happened in New York limit China's entry or delay China's entry into the World Trade Organization? What does it mean for growth? They are addicted to growth. They're very different to, say, the Indian negotiators, who, quite frankly, more than happy to be poorer longer. The Chinese are addicted to growth, but with low inflation because it's a socialist country. And they've got an element of the bourgeoisie amongst them. That means that they will do anything to ensure that growth continues. They'll also do virtually anything to make sure inflation, which could give rise to social problems, doesn't get spiked up. So they'll come to an arrangement. We're not so worried about what's happening there on China. NVIDIA upgraded as HSBC sees AI driving nearly 80% upside. So for all those people who say, well, AI is a bubble and so on, easy words, when you look at the detail, the analysts that are looking at the companies and the banks and whose job it is to work out if there's money to be made, they're not saying bubble at all. What they're saying instead is more good news for the markets. Okay, ETF inflows smash $1 trillion mark. You can see that over there. Now, why is that important? Well, that means there's a hell of a lot of money on the sidelines looking to get in. By the way, as I'm doing this live, NVIDIA's up 1.2%, Amazon's up, Bank of America's up 4%, Wells Fargo up 2%, and Wells Fargo shares rally most since Trump won the election. So there's a lot of positivity. Now, you might read from that, oh, that's overblown. In which case, if you are worried, you can prematurely exit. You can exit whilst the elevator's still rising on the basis that you're afraid it'll stop. Fine, go ahead. That's a very risk-averse approach. If you're risk-loving, you'd obviously hold and stay in, but probably keep a close eye on this market. And if you're somewhere in between and you want to take some profits, feel free. Remember, it doesn't have to be a binary decision of all in or all out, and that gives you an advantage. Let's look at some more of the headlines, which might give us any pause for concern. Now, one of the things that I want to get across to you is this. This is Bloomberg, and on their website, it's all the way at the bottom. Why the taco trade is again tempting investors amid US-China brinkmanship. It's all the way down there. Okay, all the way down there. There's a story on silver and gold, and I'll come to that as well in a second. So let's move away from what is at the moment positivity, while Wall Street is obsessing over debasement trades, and gold, silver story over there. Let's touch upon some of that. I was looking at this at the Royal Mint. The price of gold at the moment, you're paying £3,000 per ounce. Some expect it to go to 5,000 US dollars by the end of next year. It's amazing. By the way, if you want to get somebody a gift, not necessarily me, £134 for 1 gram of gold bullion. None of this is individual financial advice, obviously. I thought it was interesting. There are presumably people who are buying 10 coin tubes, 31,000. When in December, my wife bought some gold because a family friend said, look, gold, place to get into. He still thinks it's going to continue high. He's one of those who thinks it's going to go to $5,000 next year per ounce. And you may disagree, in which case don't do it. You may agree, you may want to toe dip, entirely up to you. I don't work for the Royal Mint. But it's fascinating what's available in gold and the price. They give you this crappy little plastic tube in which to put £32,000 worth of gold. Seems a bit exceptional. That's pre-owned bullion, so maybe it's a bit cheaper. And there you go. There's even digital gold that you can buy. It's fascinating. They also do, I don't know if you know it's account management, but they also do all sorts of weird things, such as greyhounds and so on. Anyway, there you go. I just thought it was interesting if people haven't come across it, because we were talking about silver, gold, and currency debasement, and so on. So anyway, that's that part. Let's get back to some of the tools and on pensions. We've updated some of the free calculators on campaignforamillion.com/tools. So you can go there to see pension calculators. You can put in the sums you might be, I don't know, I'll put in 45. You're planning to retire by 55 and you've got 500,000 in there. You're going to max out your SIP allowance, but you're going to get the UK rate of growth, which is 5% per annum. Well, that's what your pension's going to look like at retirement, I'm afraid. Not fantastic. If you get the American rate of growth in the recent past, then it's going to go up to 11,000. Let me do that again. 11,000 if you get the American rate of growth, 5,000 if you get the British rate of growth. It's why British pensioners are one of the reasons they're poorer than American ones. That's all completely free. We've created this calculator. It's absolutely completely free at campaignforamillion.com/tools. We've got another one, which I particularly like, which is Financial Independence Retire Early, the FIRE tool. Current age, let's say you're 40, and this is all free. You can play with it yourself, campaignforamillion.com/tools. Your goal at 65, annual growth rate, current amount, target amount, years to goal, 25 years. How far are you along the way, for instance? Okay. And it'll work all of that out. It'll give you projections. So when can you retire early? You might say, well, your target amount is $1 million, and currently you're only at, I don't know, 10,000, but thankfully you have age on your side. You are 22. Your goal age is 65. Annual growth rate, you're just going to go with, well, let's say because you're young, you're going with the American rate of growth. Can you make it? Yes, you can. In fact, you're well on your way. Congratulations to you. You might even say, in that case, when can I retire, Alpesh, if my goal is to retire with $1 million? There you go, 55. And it tells you all of that as well. So, like I said, campaignforamillion.com/tools. We created those apps for you and many more besides. What else did I want to show you on this as well as those tools? Well, the S&P 500, there seem been some worry. It's overbought. I want to show you something really interesting. So, since January 2023 till now, that's a 76% return. 2 years, 9 months, and 3 weeks. Okay. 76% return. What people are worried about, of course, is what if we get this again? Okay. What if we get a 21% drop? What I would say to you is you get a 21% drop, you may well want to buy, because those occurrences are rare. And whenever they've happened, you've had bloody good opportunities. So if you get a 10% drop, you might want to start buying. If you get a 20% drop, you might want to double in. The problem is that when that happens, most people are hiding under their beds because they're scared senseless. So what is going on at the moment with the market on Friday? Well, that's it. That was it. We've seen it many times before. Okay, many times before. but you saw some of the returns that the darn thing generates for you in any event. So what's a stock that's been in the news? Let's go to Wells Fargo stock. Okay, it's been in the news. It's been jumping ahead. Now, the main problem you've got with a lot of these companies, whilst they've had some phenomenal growth, I mean, from January of last year to now, 76% up. From January of last year till now, and of course, UBS and all these banks saying what a great company and so on. What really causes people to lose money is the panic. Look at that 76% return. Again, Wells Fargo's big. What causes you to lose money? Two things, panic and boredom. There's your panic because you were down 28%. There's your panic because you were down 18%. Okay. And let me show you your boredom. Your boredom is from April 2024 until, let's clean up the screen somewhat for you on this. Okay, let me just remove some of these so you can see it clearly. I'll go back again to this. For 1 year, 3 weeks, you got zero return. Hang on. Wait a minute, Alpesh. There were periods of, well, that's 10 months, 3 weeks. Call that 1 year, 1 year. So there were periods of a year where you got 0% return. But hang on, didn't you say it went up 76%? Yes, exactly. That's what I am saying, exactly that. Okay, what you can see in all of that is that panic and boredom are the two things which cause people to lose money. I'll put the slide up in a second. You can all hear me properly, can't you? 76% since January of last year, yet you had prolonged periods lasting a year of 0% returns. And there were significant drops along that period. Panic and boredom is what will kill you. What's the best thing to do? Well, if you get a good quality company, Wells Fargo, Warren Buffett's been owning since forever. I mean, you don't need me to tell you that it's a good company. Then you just buy and hold it and forget about it for that exact same reason. Guess what most people do? They get greedy. They say, nah, virtually doubling my money over 18 months is not good enough for me. I need to double it by yesterday morning. That tends to be a major problem for them. Okay, so I've shown you the calculator on campaignforamillion.com, free tools, free app here. We've gone through some of the stock market stuff, the S&P, and why I'm not particularly worried. Today's not the day I need to think about selling. We've looked at gold. We've looked at the news items. If you would like a free call with my team about just pensions one-to-one and why your pension's underperforming, you can also go to campaignforamillion.com free call or alpeshpatel.com/free call. And as I said, all those tools are there. And I'm going to leave you with one more thing that I want you to have a look at. The articles that we've written where we've gone through a whole bunch of them as popular funds and why they're rubbish, why they've been performing so poorly. So if you look at, say, something like a Fundsmith, we do video and a very detailed analysis of what its returns have been and the fact that it's been generating 5.8% per annum for the last 5 years. For instance, contrary to what people might think about funds like this, we really break it down into a great deal of detail for you, not just with this fund, but with a bunch of others. That's again on campaignforamillion.com under the articles and the blog items. So very quick one. I'll try and do more of these in future where I go through the stock market news, any items that are there, any useful websites, third party or otherwise, and go through the stock market, very briefly, the S&P as I did just then, and some of the tools and things we have as well. I'll try and do more of these, but for now I'm going to jump off only because I've got a busy day and I want to spend some time with my son. He's going to be finishing school soon. I'm going to start heading back. Okay, thank you very much. Where did I go to uni? Have a look at my LinkedIn and you'll find that there. Only just joined the live, leave my pension pot as it is. I'm 37. Depends what's in your pension pot. The biggest problem you'll have with your pension pot is lack of growth. And if you want to have a look at growth on it, have a look at the pension calculator. It's the major problem that people have. You said you're 37. Okay, it's 37. Let's say you want to retire by 55, and let's say you've got 100,000 in there. I don't know how much is in there. Let me know how much is in there. Okay. And let's say you're going to do the maximum contribution. The major problem you've got is if you leave it alone with a 5% growth, which is your typical British growth, you're only going to have a pension at retirement, monthly pension of 6,000. You might as well, 6,000 is phenomenal, Alpesh. I'm happy with that. Thank you very much. But here's what you could have won with American stocks, 22,000, assuming big assumptions they continue doing in Britain what they've been doing. Well, if you think they're suddenly going to become Americanized, good luck to you. And the Americans continue producing the rates of growth they've done pretty much since the Second World War. Okay, so have a look. John, you said you got 104. Well, yes, I was right. I guessed right, didn't I? I said 100, so for the sake of it. This is free, this tool, alpeshpatel.com/links, or just go to campaignforamillion.com/tools, campaignforamillion.com/tools. Okay, so hopefully you'll like all of that. Thanks, everyone. Like I said, I'm going to leave it a bit early today just because I've got quite a bit to get on with for the rest of the day. But thank you all. Have a look at my links, alpeshpatel.com/links. If you've got any questions, you can email us and so on. And don't forget to like, follow, share, subscribe, all of those wonderful things that people do. If I don't say that, see that thing there, that little silver YouTube thing? I'm on YouTube, I'm on Instagram and all the rest of it. Loving sharing all this information. And you can also download a free copy of that from alpeshpatel.com/links as well. So lots of places to go, lots of things for you to look at as well. Thank you very much to all of you. Thanks, guys, and I will speak soon.